Welcome to Own the Chaos. The stock market is crazy and chaotic.
Crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. That over there, halfway across the country, is Fat Man Zoom. The stock market is crazy and chaotic. We made it our mission to help you guys own it, and it is another interesting day, Fat Man Zoom. But before we get into any of that, why don't we hit everybody up with the starting five?
What's going on, people? Starting five today, we have, is this right? Sorry. Starting five, we have Savvy Money Show, Rudy Brown, Tiger's Edge, Eric Brands, and Jay Chocolate, Jeff Chow. What's going on, people? Welcome to Own the Chaos. Brad, first off, I got to give an example, so I'm going to hijack this a little bit.
Okay.
But Rudy Brown said, "Holy OWV Batman," and
my God.
OWV went off. It went off. You were in it. I was in it. I'm still in it for a small initial stake that I had, or trimmed off to now I have a small stake. But it's crazy because I was seeing some chatter in Discord kind of back and forth.
Yeah.
And about how, every time I think it's going to pull back and give me an opportunity to get an entry, it keeps running up. And OWUV has had a lot of news coming, just made another acquisition in the NFT space. So that's been exciting for them. And I think they've benefited off of that hype. But I don't know if you know this, Brad, but it's an interesting scenario because my remaining OWV position is up over 2,000%. Huge. By far my best trade.
Yeah.
But I just want to point this out because a lot of people who feel like they missed the boat, it wasn't always that obvious. We brought this stock to the channel, and actually a community member, a crew member brought this stock back in October of 2020.
Yeah.
Right? It was sitting at 2 cents. You got behind it and more publicly talked about it as a stock you liked. I actually wrote it down. Hold on. February of this year. So this hasn't been something where we're just rolling in and it's been an easy trade.
Right.
It was over a year of patience and conviction in a stock. And so I just wanted to point that out as an example. 2,000% is great, but if you were in it since October, it wasn't a no-brainer back in October. So there's an example of, if you have conviction, if you have patience, it can pay off.
Yeah, man. And the thing of it is too, is that this is not just for penny stocks. I mean, obviously OWV is a penny stock and it went crazy, but people, that give us hard times about stocks that we've been down in for a while. A perfect example of this would be Dry Shack or Penn National. It's your conviction's still there. Nothing's really changed with the company. It's just that people either fall out of favor with it or they get bored and they move on or whatever. And staying in something like this is really what's going to pay off, having that patience, like you were saying, because you just never know when the day is going to come where it starts to pop off and then the FOMO kicks in and all that good stuff. So that's why it's just sometimes it might feel like bag holding, but the patience, as long as you have the conviction there, is certainly bound to pay off at some point. What happened? I lost Fat Man Zoom's audio. Man, I was on a roll there too. Come on, man.
Sorry, I can't see on my end, but I can see me on YouTube. Sorry. Okay, so you guys can hear me. Brad, you roll with the show. I got to reload.
Okay. Sounds good. Anyways, you get what I'm trying to say. Obviously, this also depends on, the quality of the company and if you've done your due diligence to enough to where it makes sense, right? Because there are instances in which you're holding on to just a big old pile of shit, right? and I'm not going to sit here and bash the AMC guys because, it's done its thing, but that's a good example of something where you just get so consumed by the emotion of the stock rather than looking at the actual bones of the stock. And that's a little bit different. When you're looking at something that actually has good bones, good fundamentals, and it's got tons of potential, that's when conviction starts to really kick in, and it starts to take over the emotional side of it. And again, I'm not going to sit here. I'm not going to sit here and shit on the AMC people, but it's the mentality that some of them have of just like, oh, it's going to 500K. And it's just like, why? You can't give me a reason as to why it's, well, just everybody's going to buy it. That's not good enough. You got to have something solid behind it to say that it's going to do what it's going to do. And that's why, even though some of the stocks we can do all the homework we can, and it still doesn't perform, we still remain that conviction because it's going to eventually work out in the end as long as you have that kind of patience. Rudy, good example, says I was down for months. Patience pays. Yes, absolutely. It certainly does. Housekeeping says I'm still in Drive Shack and Penn. We won't ride or die them stocks. And that's the thing, right? The Drive Shack is is one of those stocks that literally I haven't seen very many channels, very many social media chatter talk about it. And that's why we continue to just remain steady in it, because eventually some big money is going to come in and pay attention to that company and be like, they got something going on here. Right. And so we're just going to continue to maintain our conviction on something like that. Obviously, Penn has its benefits for holding on to that too. I think that there's no reason for me to really sell that. Either really the thing that continues to kill something like Penn and really all of the other gaming stocks, you look at DraftKings and some of the other ones too, has been COVID. COVID killed the Arizona Bowl, and it's killed a lot of things. And so that's why we're just going to continue to just kind of weather that storm a little bit, because there is light at the end of this proverbial tunnel, and it'll eventually work itself out. Rudy Brown says, I bought ILUS and OWV a week apart and was down on both until the PR started to kick in. Yeah, I mean, that's what I'm saying. Eventually, the shit starts moving, and then you don't want to be the one chasing it at that point. You want to be the one in it before all that stuff happens, for sure. Are we back?
Yeah, we're back.
Okay. Usually, I just like went on a great little spiel there, and then all I got was just you staring at me, and I was like, did I say something wrong?
Well, on YouTube, I could see it, and I could see myself, and I could hear myself. But on this screen, it was straight black, and I couldn't hear you. I couldn't see you.
That's weird.
Yeah. So no, but I heard the other piece when you were talking about AMC, and I think sort of the final point I'll make and why I brought it up was like, there is a fine distinction between bag holding something and having high conviction, and that's a decision that you have to make and you have to determine, because you don't want to get stuck in everything. But if you do have conviction and stuff, once it starts, it's easy to look back on it. But once it starts moving, if you were sitting in it for 8 months, 10 months, who's to say that you didn't sell on the early end of that? Because that also happens too, because you're like, you've been so impatient. Yeah. You're like, oh, let me just take my profits.
Right.
So there's levels to it. And it was just interesting how OWV played out, and kudos to those who are still in it and those who were in it, who made money on it. As obvious as a pick it seems right now, it was not obvious in October of 2020. Yeah,
absolutely. It's just good stuff. It's good to see people just absolutely crushing on stuff like that. So I was going to say, not related to penny stocks, but I was talking to Jeff Chow earlier. I hope he doesn't mind me talking about this, but we were kind of talking back and forth about just the stuff that he's in. It's, a lot of the stuff that he got into was pre-pandemic or thereabouts or close to it, and just to throw out some names just such as Etsy and Amazon and stuff like that went up double or more. And he was just kind of like, I don't know what to do with some of this stuff. How do I trim some of it off? And we just had that conversation, but like, it was interesting because most of the stuff that he's in, he's playing with house money. And really at the end of the day, as long as you get to that point to where you're playing with house money as fast as you can, and then the stress is off, and you can kind of trim off whatever you want. His problem is a good problem to have, is that he's up so much on all this stuff and it's all free money. It's all house money that he's playing with. He took his capital out of most of those positions that went berserk, and or all of them. And so now he's just kind of like, well, I don't know what to do with this. Do I just trim some of it off or whatever? And we had that conversation. I won't get into that, but it was just interesting to see that there are people out there in our crew that do implement this and really kind of practice that risk management that we always talk about, getting their capital out as soon as they can. That way they can kind of do whatever they want with the money that they've made.
Yeah, absolutely. Shout out. Kudos to you, Jeff Chow, with that free money.
He's crushing it, bro. Crushing it. Yeah, Jeff's doing a really great job. So topic of discussion today is going to be on Tesla. Elon Musk is finally done selling. We hope pretty clear that he's done doing all of that and exercising his options that were set to expire in 2022. And the stock has responded. It was interesting to kind of see the dynamic here because the stock actually started moving well before that. I think some people thought that perhaps he was going to be done selling earlier on. And we take a look at the chart right now. And I want you to get your guys' thoughts on this too. Let us know in the comments what you're thinking about Tesla, because it's been making some interesting moves. Here's the daily chart here. We just heard that Elon has finished selling stock this week. The Form 4 came out, I believe it was on Monday. And we're finally starting to see this start to move back up to levels that we saw, back here in November, really kind of when the selling started. He started selling this off at the beginning of November, and the stock has obviously been downtrending since then, and it finally started to make that bounce towards the end of last week. Hasn't really looked back, save for the last couple of days, but it just went from red to green just now. So maybe today ends up being a green day for it. But, if Elon's done selling billions of dollars of stock, there's reason to believe that this could certainly be pushed back up, just on the simple fact that the selling is over. And I think there's a lot of people that could be excited about that, and we'll see what happens going into the new year. But I think that that's definitely a bullish catalyst for Tesla. And there was actually an article that was put out here too and I want you guys to get your guys' thoughts on this as well. But there's an article put out by Yahoo Finance that's basically titled "Why Tesla Stock May Be Headed to 1800." And it's interesting because he made some bull cases here, and it really kind of quoting Burl Ives, Burl Ives, not Dan Ives, Burl Ives. Oh my God, Dan Ives from Wedbush, and talking about how Tesla can outperform, basically citing the 40% increase in Tesla deliveries that would happen in 2022. And if that happens, and he's obviously, Elon's been making claims about how the Model Y will be the number one selling vehicle in 2022. Maybe there's a case that could be made for something like that, a move that could be made where Tesla sees 1800 in 2022. That would be incredible, especially considering that it barely made that type of move percentage wise this year. And maybe the bounce that we're seeing it go from, the $900 area to almost $1,100 where it's at. Maybe it's not that crazy to think about, but I just thought that was impressive, especially just given the run that it's had over the last couple of years.
A comment that Alma Godoy said back to 850 before it takes off again. Alma, I think the pullback you're mentioning actually kind of already happened. So I'm not sure. Maybe it could do that. Two things I'll say to your comment is one, some people have already said he's been done. So I think it's surprising to some that he did sell a little bit more. So I would wonder if the move up has been because they thought he's done. So I'm not sure how much more happens because of that.
Yeah.
I will say that it's been promising how well it's been holding up, and how when it came down to 900, it did come back to 1,000 fairly easily, which historically we've seen a different type of volatility from Tesla. So 2020 was much different than 2021 with the volatility, I think, from a positive way, like from a positive perspective. So that's good. The other thing I'll mention is Dan Ives, 40%. If you listen to any of the earnings calls, actually they've stated that for at least the next 5 years, they're expecting 50% growth. So 40% is actually an underestimation by Tesla's own remarks. I think that the year-end numbers and the expectations for next year, which should easily be above 1 million, but really, if you're looking at that 50%, 1.2, I think that's the next thing that could get this thing moving and should potentially do well for the company if they could deliver those 1.2.
Yeah, in the same article, Dan Ives actually said Tesla stands to surprise the street by delivering close to 1.5 million units by year end. If that happens, Fat Man Zoom, that would be wild. And I could see it get to 1,800 if that takes place. So 1.5 million units.
Oh yeah, 1.5 million. You're talking about 100% growth. I think that's insane. I don't think they have the capacity, and there's some constraints behind that. But yeah, 1,800 would easily be on the table if they hit that. And keep in mind, it won't even need to be till the end of the year. But you come to quarter three, you're going to be able to see if you're going to hit 1.5 million, you're going to be, a quarter three at 1 million or whatever. So it's about to hit. So that's when it would potentially go off.
Yeah, I mean, the other thing is that there's also a theory that perhaps even if they experience growth, that the stock doesn't move all that much, right? Because I mean, it's already moved a ton. So maybe this could be more or less sales catching up with the price of the stock too. So there's that as well. I mean, when you consider just how much this is trading at a multiple, just because they outperform in sales and stuff like that doesn't necessarily, it's always going to be reflected in the stock, especially given how much this has already moved ahead of itself. So there's also that element there too. Maybe 1,800 happens as a result of those sales, but also consider that, people, because sometimes, and we've seen this before, right? They'll outperform on earnings and the stock barely moves, or maybe it even goes in the opposite direction, because sometimes you'll see it get ahead of itself. We'll see though. I mean, if that happens, I do think that the stock will be, shareholders will be rewarded for numbers like that for sure, just given the hype that's surrounded around EVs in general. And honestly, if that happens to Tesla, then I think that, one of my biggest holdings in Ford should also do extremely well, especially if they stick to their word and their timeline on kicking off that Ford Lightning. That should be huge for the EV industry in and of itself.
Yeah, and keep an eye on if Tesla does continue to expand growth and increase the rate of growth, as Dan Ives is predicting. You got to think about what competition does. Can competition keep stride? You don't need to hit the same numbers as Tesla, but your rate of growth needs to certainly keep pace. And that seems like a very tall task. Sort of on a side note, in the same realm, I'm interested to see how, with all the shift towards EVs, what's happening with all the complementary services when you think about whether it's just the battery technology side, whether it's charging stations. I mean, one of the biggest things to address is charging stations, and you can't have a 30-minute wait time to fill up your tank. Whoever moves to that, whether it's a car manufacturer, whether it's a charging company, if you address that, and you can fill up an EV in 5 minutes, what does that mean for your company? So that technology as well is really exciting and worth keeping an eye on. And maybe you could argue could have bigger upside than something like an actual EV car company.
Yeah, I mean, and that's kind of what there's certain things that Ford does that's a little bit different too, just with some of the features that they have, like being able to charge another EV with your EV, or charging your home and stuff like that. So I think a couple of those things might just make it a little bit more attractive and just kind of give them maybe some sort of edge. I don't know. But I think Tesla could probably easily implement something like that as well. We'll just kind of see how that all takes place. But man, I think that if those types of numbers come to fruition for something like Tesla, I think it just bodes well for the entire industry as a whole. So really exciting stuff there. Also, I just wanted to give everybody an update. Jeff Bonica always is very consistent in putting these numbers up. I appreciate this. Jeff says, own the Chaos's top stocks for December, which, by the way, we'll be putting out a January video very soon. For December's month-to-date performances, Amazon still at a loss of 1.5%. I just don't understand Amazon. The kids can't get its life together, but crushing it with the other four here. So 4 out of 5 is pretty darn good. Marathon Oil is up almost 10%. Oil has been running big time here, as we thought it would, making its way towards $80 a barrel. We got Disney also up 9%, which is a pretty good bounce back. PayPal is up 6.5%, and Airbnb is up 3.1%. Guys, if you want stocks like this that we put out every single morning of the week, make sure you go down to the comments below and go to onlychaos.com. Down at onlychaos.com, you become a Chaos Crew member. You can also get a more detailed list as well. And that morning before the market opens, we put that list out. We send it out to all of our crew members, and it helps support the channel. All that good stuff allows us to keep doing what it is that we're doing here. So we certainly would appreciate the love and support if you go to onlychaos.com and become a Chaos Crew member today. Looking at Jeff also said, I want a Tesla snowblower. I haven't seen that. Have you seen the Tesla snowblowers?
No, I haven't. Is that a thing?
I don't know. I don't know if he's making that up or that it's actually a real thing. It wouldn't be surprising if there was a real thing, but that would be crazy. You imagine just the torque on an electric snowblower probably just like tosses that shit like 100 feet.
Yeah.
Don says, keeping up with Tesla's rate, the CEOs would have to think and move like him, and they move like fossils still, though. That's a very good point, Don, for sure. Like I said, I mean, I know that I don't want to keep harping on this, but the only company that I really feel like is doing that and investing a shit ton of money is Ford. And if I'm going on the European side, I think it probably is Volkswagen. But either way, neither one of them can hold a candle to Tesla. So it's still going to be Tesla number one. I think the case that I'm trying to make is just who's coming in second. And I think it's Ford.
Speaking of EVs, I'm not sure if people realize, but NIO is about to enter into the U.S. market.
Yeah.
Which will be really interesting to see the adoption and see how consumers respond to it in the U.S. I have a guess, but it's really anybody's guess on how they respond.
Do you know when that's supposed to happen?
That's a good question. I can pull it up.
A couple other stuff here of note. Guys, let us know in the comments too. Put it in the chat what you're looking at today, what you're looking at this week. What are you looking at in 2022? What's your favorite stock that you're looking to buy and hold and that you think is going to perform the best in 2022? I got a couple of them, and I'll share them with you if I only get some from you. So I don't want to be the only one talking up here. So make sure you're putting them in the chat. What's your favorite stock that you think is going to just blow everything out of the water in 2022, at least outperforms the S&P 500? Put it in the comments below. Definitely want to hear from you on that.
I don't think they have. It just looks like it's 2022. They've already begun. They've begun hiring. They have 50 positions in the U.S., ranging from software engineers and developers. But it just kind of says 2022. However, in 2022, it also plans to enter Germany, Netherlands, Denmark, and Sweden, and 25 countries by 2025.
That's for NIO?
Yep. Yeah.
Okay. That was a seamless comeback. You know what I did? This is very dangerous.
What's that?
On this mouse, all I have to do is click this side button, and I just left the studio.
I've done that. Yeah.
Remember
when I jumped off Zoom, you're like, what happened? That's what I did.
Oh, really? Yeah. I was just like, what the hell? I have to make sure to keep an eye on that. But I was looking at what was Brad Harris saying? Brad Harris, I found. There it is. He says, do you think Robinhood will let Shiba coin, be traded on their platform? I feel like if they haven't done it now, they're not going to do it. The reason, the best time for them to do it was when there was all that hype surrounded around it. I don't think that's actually going to happen. And not only that, but Robinhood hit its all-time low today. I don't know if you noticed that, but it is still getting absolutely hammered. Batman's name. It is just a sad. I mean, eventually, I guess this is going to be a buy, but man, right now it just cannot get itself together. Take a look at the chart here, and it is just not doing what people hoped it would have done. I don't know what gets this moving back, especially since they've struggled so much to actually make money in this stock. And I don't know if the environment we're about to go in probably doesn't bode well for them either. I don't know what gets Robinhood back on the right track, but this is something that I probably would stay away from for a while until we get some sort of word from them that they're actually going to be making money.
That's it. Interesting. The whole Robinhood situation is very interesting. I'm surprised Kathy Wood keeps buying it,
Yeah.
but it's a conviction of theirs. My thought is what needs to happen is they need a new CEO. But I'm going to take it a step further. I think as this gets lower, does this now become like an acquisition target? When you think about the platform branding, you can't deny sort of the simplicity of it. And that's really what a lot of new traders have, or new investors have really gravitated towards, is its ease of use and its functionality. They don't need the bells and whistles.
Right.
So if you take, another company, another broker who says, you know what, we want to leverage the platform, buy that. And then you've mentioned how the statistics behind how much crypto is now trading, it's kind of turning into like a crypto brokerage. So then again, you think about a broker, okay, this is our entry into crypto. It looks like it could end up being an opportunity. So either an acquisition or change of CEO, or an acquisition and change your CEO. Maybe the best case scenario.
Yeah. Well, the CEO's definitely got to go for starters. I never even thought about it as an acquisition target, but there's definitely a case you can make for that. I mean, it didn't take much for Charles Schwab to acquire TD Ameritrade, which was a giant brokerage company, right? And then you had who acquired E-Trade? Morgan Stanley acquired E-Trade as well. So like there's brokerages out there. There's investment banks that have stupid money where it wouldn't take much to really scoop up Robinhood. I don't know who would actually do it though. It would be interesting to see who would actually take the plunge to try to offer Robinhood some money. Because here's the thing too. The reason I think it hasn't been acquired up to this point was because the valuation of it was so crazy high. And now that it's being traded in the public market, it's not anymore. People are losing faith in just how much this would actually be worth. So I don't know. I mean, I'm looking at the market cap right now. It's at 14 billion. It's probably still too high for most brokerages to consider taking a stab at this. So it may come down a little bit further before people start looking at it and thinking it's attractive.
You know who I would love to get it really off the beaten path is like a PayPal.
Yeah. Really?
Yes.
Yeah, I guess I could kind of see that.
Like PayPal's like obviously dabbling in crypto. You can only get 3, I believe it's 3 on their, or 4 on their platform. I believe it's Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. But it's not like the platform's horrible, if I'm being honest. The only reason that's where I get my crypto. The only reason I use it is because it's where I have extra money. So like I kind of never let it see my bank account. And if you think about, they have the Venmo user base, right? They have a ton of people that they could move over to that, and they want to clearly get into crypto, but nobody thinks of PayPal as like, that's where I need to buy crypto. And the tools they have are they're just horrible. It's one of the worst places if you want to get crypto to get crypto.
And the transaction fees are pretty high too there, aren't they?
I think so. I mean, I don't know what the other ones are, but I feel like they charge a pretty steep rate in transaction fees.
Yeah, that would make sense if they did. All right. So I asked and I received. A lot of you guys in the chat gave me some stuff that you're looking at. I certainly appreciate it. I'm going to start off with, I see a lot of penny stocks in here. I see a lot of ILUS, which, hey, ILUS maybe riding the curtails of OWUV. But in my opinion, I think that ILUS has already made the move a little bit. So that was a good 2021 stock. Can it carry on into 2022? Maybe. But we'll see how that shakes out. It's a long year, right? But I do like what Don Fran has put on here, and that's the XLF. He says the XLF is mine. If you guys don't know, the XLF is the financials ETF. It's not leveraged. It's just straight up financials ETF. Let's take a look at this. And this has been an interesting one. I'm with Don on this too. I think that the XLF, the financials in general, this is primarily made up of Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, Wells Fargo. I mean, you name it. You think of a big ass bank and it's in the XLF. Well, let's go to the monthly chart and see how this has actually been performing. So if we go all the way to 2007, 2008, This is kind of where the XLF obviously crashed. The crash of 2008. The ETF came down to $4.77. It never recovered until February of 2020. And then guess what happened? It never even sniffed what it got back in 2007 before the crash then. And then then COVID happened. And then obviously COVID happened, and the market got stimulated with the Fed buying back bonds and all that good stuff, which benefits the banks greatly. And it finally broke out. And we called this breakout back in January of this year. Once this happened, I thought that we could see a huge breakout from the XLF. But guess what? It's not over. It's not done. The Fed's going to also raise rates this year. I think that everybody can agree that we're going to see at least one rate hike next year after the taper gets done in March. So I think that there's definitely a case to be made that we could see the XLF or the banks in general just continue to roll here, especially since they were down. I mean, they never really fully recovered for 10 years, over 10 years. From the crisis in 2008. And I think that this could potentially be their time to shine. We keep talking about this rotation from growth into value and the environment we're about to go into with rates going back up and, being in good, solid companies that make money. And, the banks are definitely it. If you don't want to own an ETF, if you don't want to just own all of the banks at one point, at one shot, then maybe take a look at one of the actual stocks. Our favorite one is Goldman Sachs in this space. I think that's a solid one. It's investment banking, so it really doesn't have any exposure to the mortgages and all that good stuff. But if you want a regional bank that has really good balance sheet and their earnings have been stellar, they're buying back stock along with Goldman Sachs and a lot of the other ones. But Bank of America is also in that category. I think it's worth owning and probably will do well going into 2022. And honestly, I'm surprised it hasn't moved back up towards $50 a share. I think that it should have this year, but it doesn't really matter what I think. But I think that we could see $50 in 2022. And I think you probably see it relatively early. Go ahead. What were we going to say?
I just wanted to mention a couple of people just shouting out what they're looking at. We have Clover parking money down there in the high threes and waiting for the double, says our family. Savvy says IONQ. GGPI for 2022. Also have Disney, JP Morgan. I really like Disney for 2022. That's one of my highest convictions. A lot of Meta, Nvidia. Tammy Johnson says I'm going to be loading up on Meta, Facebook, Meta platforms, PayPal, and Disney for 2022. Housekeeping says I also want to buy more Airbnb, Salesforce, and Starbucks. We've talked about this a lot, and now more than ever, this still rings true, which is while the market is hitting all-time highs, there's still a ton of great opportunities, and not just speculative, but really good companies that are on discount. There is a ton of them. So whether you're looking at, a Starbucks, whether you're looking at Disney, a PayPal, or even some of the ones that are waiting for COVID to come back, whether it's like airlines, those type of things, and even casinos to a certain extent, there's just a ton of opportunity. And I feel like people always want that next spec, but there's just good stuff that you can get and probably sleep a little easier at night.
Yeah. And it's funny that you mentioned the streaming services as well, because I do think that Disney's going to do pretty well too. But streaming companies, so I had an article pulled up here. And because I was just kind of like the secondary topic that I was going to talk about. So I'm glad that we're talking about it now. But the top 8 U.S. media groups that stream, that offer streaming services, so the top 8 are planning on spending a mind-boggling $115 billion next year on content.
That's crazy.
So for those of you who think that you might have missed the boat, I mean, $115 billion is insane. That is ridiculous. 8 companies are going to spend a total of $115 billion on content. So if you don't think they're fighting for your service, you got another thing coming. And I think that there's definitely, worth taking a look at being in one of these companies, whether it be Netflix, whether it be Disney. You could throw Roku in there, but I think the top players are going to be Netflix, Disney, Amazon, maybe some of the legacy networks. We could look at potentially a Comcast as well, or Paramount Plus is really gaining traction. I don't know if you saw this, Fat Man Zoom, but Yellowstone and some of the other stuff that they have going on Paramount Plus is they got some really great shows coming out. So there could be one of those legacy companies in the mix too, but I think it's definitely going to be Netflix 1, Disney 2, and then watch out for Amazon, because I think Amazon Prime is really going to start to dump a bunch of money in the content creation as well.
I think Amazon Prime is certainly a sleeper. I throw Paramount Plus in with Apple TV Plus, which is essentially like you got one show. That's it, Yellowstone. Apple has one show. It's Ted Lasso. And you got to show me that you can replicate this model. But this may be surprising, because it was surprising to me. Our Man Mill Crew has a lot of people who are very, very in tune with streaming and watch a ton of content. So I did a poll where I basically said, guys, rank your streaming platform. Guess who won?
Netflix.
Netflix wasn't in anybody's top 2.
Wow.
HBO Max was number 1.
That was my next guess, yeah.
Which is very surprising. I think most people, you want to not think that HBO Max has to make a run at it, but they are coming out. They've shown that they consistently bring out good content. And it's kind of like the EV situation. Is it an old dog? Is it a legacy company? Or is it somebody new in the game? Now, I still believe that somebody like Amazon has the ability to do that. But the challenge here, or the one thing that I think is going to be a difference maker, why I still believe that Netflix is number 1, just from like a stock perspective, is the one thing that Netflix does a really good job of is they actually the narrative is that they actually look out for their investment. So you think about Dave Chappelle and how they handled the whole Dave Chappelle situation. Right. That's a good look. Whereas when you look at like Disney and their Scarlett Johansson situation, remember where there was like this big, like they kind of shit on her a little bit and went at her. Those are two different ways of handling it. Now, maybe this is just an anomaly, but how you do business is really important as well. And if you have a reputation as, hey, they're going to look out for you, they're going to work with you, they're going to have your back, that's maybe a competitive advantage that Netflix has that will be hard for anybody to replicate. Yeah.
It's a great point. I'm looking at a couple of the comments related to this. Don says, I only really watch HBO and Disney Plus, and Don's got kids, so that makes sense. Unless the world is talking about something on Netflix, then I turn that on. It's a great point. I guess I'm still just stuck on Netflix. Netflix is probably my number 1. I got done watching. I binged what was it? The Formula One docuseries, which I thought was amazing, but I don't think a lot of people actually know exists. Maybe some do. I know some of you guys who watch the channel do. But I actually, and you're going to like this. Have you seen Welcome to Earth on Disney Plus?
No. Is that the Will Smith?
It is. And it's phenomenal. It's only 5 episodes or 6. You got to watch it. It's so awesome. But I just started getting into that. So Disney's original content, which to no surprise is really, really good too. So yeah, I actually haven't watched a 1 minute of HBO Max, which is probably
HBO Max has some good stuff. It took me a while to get into it, but has some good stuff. Yeah. But I think that the brand identity that Netflix has, the international reach, I think it's their position to lose. Yeah. And they seem to be doing things right. They had a couple hiccups, but they look to be back on track. Again, you think about productions and countries reopening, that's also hindering them a little bit. There's shows that just can't continue production or production halts, or there's just challenges around it. I mean, just to have a production and the cost of testing, I could imagine is like a cost expense that's ridiculous and an inconvenience and all that. So those are things that everybody has to deal with. But Netflix, when all things are equal and when everybody can just spend money, I think they're going to reestablish sort of like the game they had. And I think they're going to continue to dominate because of their international presence. Disney will have a role. And eventually, I think they'll just pass Netflix sheerly because there's always going to be kids and there's always going to be parents wanting to, entertain their kids. And so they're the king of that. But Netflix, man, they're obviously making the right moves. I do think they're in a bit of a lull, but I'm not worried about that coming back. And nobody does. The thing about them is they don't talk about, like, nobody does comedy like they do comedy, like the stand-up
Yeah.
specials. I think that's a unique competitive advantage that they have.
I agree. There really isn't anybody else who has this. I just lost my light in the background. Oh well. I see that Brian Wood says this is interesting. I didn't know this, Fat Man Zoom. So maybe it's a step up from Apple Plus. But he said the only reason I bought it was for the Champions League. So internationally, maybe there's some. Obviously soccer is very popular internationally, so that maybe that could be something as well. But their competitor is going to be Fubo. So there's definitely that dynamic too. So interesting. I didn't know that Paramount Plus offered that.
I didn't either.
So there's so much good stuff here that people are responding to. I didn't realize this was going to be a topic that people really got into, but I will stick to my word, and I'll give you guys 3 stocks that I think could outperform the S&P here in just a sec. But Brian Woods brought up a good point. Says I'll buy Netflix stock the day they make it harder to share passwords, which they have been. They only limit you to you can only I think have a certain amount of people profiles or whatever on there, but very good point there too. But I think you can share passwords on just about every.
Yeah, you can. And I think that's actually, they could stop that if they want to. I think they use it as like a marketing tool.
Yeah. Don says, well, Don, you can also watch sports on Hulu as well, Don. But he says, I don't hear about viral stuff on Hulu, but Netflix has some bangers like Squid Game and Don't Look Up. Hulu's got a lot of good stuff. I actually watched the WeWork documentary, which I believe was on Hulu, and that was actually really good. But Hulu also has The Handmaid's Tale, which people go crazy over. Okay.
Hulu's a pig with some lipstick on it. It's a dog.
I mean, Disney. I don't know what Disney's going to do with it. I feel like they could consolidate that into either Disney Plus or something.
I agree. Just forget about Hulu. Focus on Disney Plus. Focus on ESPN. That, ESPN has a huge upside. So yeah, I mean, I like, it's like, I don't understand what Hulu is, to be honest with you.
Yeah. I think it was at one point a company that tried to compete with Netflix, and then they couldn't. So then Disney here will take you, and then they haven't really done much with it since. Looking at some of the other stocks that people are watching, just kind of getting back on track there. I'm looking through here, and I see Coinbase on here. That potential that could potentially make the move next year. I think that's possible. Here's what's the thing about Coinbase, and I'm a little bit, we didn't make we did not. I don't think we did. We didn't make predictions for price targets on Bitcoin in our bold predictions video.
Yeah, we did.
Oh, we did? Okay.
Yeah.
But it might be a tough year for cryptocurrency, because if we look back in 2018, what happened with Bitcoin during the similar environment, I'm not going to say it's the exact same, but it was similar. Crypto didn't do well. And I don't know if they actually do well when, where interest rates, go up and that sort of thing. So it'll be interesting to see what Coinbase does, because it's going to take a lot more money flowing into cryptocurrency and Bitcoin in general. And, I still think there's potential for Ethereum to double. I still think that, Bitcoin will stay up, but I don't know if it's going to have the same type of parabolic moves that we saw last year. I could be wrong. I mean, it's averaged 200% a year, so I could be completely off base here. But just given the environment we're getting ready to get ourselves into and comparing it to similar environments in the past, and obviously we don't have a whole lot of history with Bitcoin or cryptocurrency in general, it was a little bit more tumultuous in the cryptocurrency space. And it's been really tough this week, which is interesting. Bitcoin fell back below 50K. I don't know where it's at right now. Let me pull that up. But yeah, and just to kind of tie this to Coinbase, obviously, if there's money flowing in the cryptocurrency, then Coinbase is going to do well. But if they're staying away, if they go on a little bit of a buyer strike, then Coinbase may not do so hot. And so we'll see. I mean, Bitcoin's now down to 47,000.
Yeah, so, you know what? And to clarify, you're right. I don't think we actually did a price target. I correct myself, but I think we did talk about crypto and Bitcoin and how it would perform. I think also when you talk about averages, were you saying that Bitcoin averages like 200% a year?
Yeah, since inception, it averaged 200% a year.
I think that's also a very misleading stat because there was like a huge spike where the reality is it's only like, not that 90% isn't a good return, but it's only up like 90 some percent this year.
Right. Yeah. Here's the monthly chart, just to kind of give you an idea of how it, traded since 2015, really when it kind of became quote unquote mainstream, or when, it became the most accessible. And so, it went from what, 419 in 2015, $419 to 47,000 today in 6 years. So that's insane. But yeah, you have this lull here, this crypto winter, if you will, from 2017 when it went all the way up nearly to $20,000, or did hit $20,000, I believe, and then just kind of stayed flat for the most part through 2018. And this is kind of what I'm talking about. If we see the same type of environment we saw then crypto could just kind of sit here for a little bit until we start to see the move again. So, not saying that we're going to see a huge crash or anything like that out of Bitcoin, but it may just be flat for a little bit. We'll see.
Yeah, and that wouldn't necessarily be a bad thing. I think people are so used to the hundreds of percent returns and, that expectation. I don't know. I think especially as there's just saturation of altcoins, that also presents a challenge, not just other investments, but investments within the crypto community, and then the NFTs as well, which is starting to take a lot of the attention as well away from altcoins.
Yeah. I agree. Now there's people talking about sports. Maryland over VTech. Yes, I think Maryland over VTech. 27-10 seems a bit ambitious, though. All right, so let's get into real quick what I think might outperform the S&P this year, and giving you a little bit of a teaser to the video that I just got done recording. It's going to come out here soon. I'm going to be talking about why I think these stocks are going to do well. Apple, I think obviously it's a softball. I think Apple's going to outperform the stock market again next year. It came in the last inning of the year, really, to finally outperform it. It was underperforming the stock market up until this fourth quarter. Apple was, and I think that Apple, when you look at everything that they have going on, their supply chains are easing and demand has not slowed down at all. So if the supply chain issue is getting resolved as we go into 2022, and we already know that they have pricing power, their hardware alone, they've been able to get those profit margins up to 50%, which is pretty wild. And so I think that Apple's well positioned to outperform the market yet again next year. And again, like I said, I know that's probably the easy one, but just given how much this has moved over the last 5 years, Apple's gone up 500% on average, all combined, which is mind blowing. So I think that to expect it to do it again this year actually isn't all that crazy. It is crazy to put that projection out there that it's going to beat the market again, I think. So Apple's there. I think Boeing, as we talked about it a little bit on Stockwatch Sunday, but I think Boeing's going to be a stock to own. The reason being is because most of the industrials have had a really tough time, especially with some of the supply chain issues, and they've really struggled to get back on track to actually making money. I mean, Boeing reported a loss of 60 cents a share in the third quarter, and it might actually report another loss here in the fourth. But next year, I think, could certainly be a great year for them, especially with how long this has been in the doghouse, with COVID really kind of subsiding to a point to where either people are just learning to live with it, or the variants are becoming less and less deadly, or a combination of both. I think that industrials could have a really great year, especially given that people are moving into more value and people are looking at stocks that are just good, solid companies that are worth owning. And it's obviously a Dow component and all that good stuff. I think that Boeing certainly has a great year this year. Could be wrong, but the setup is certainly there. And then lastly, I picked a bank as well. I think that JP Morgan actually has the potential to beat the stock market this year. Just because it's moved a lot last year doesn't mean it's not going to keep going. I mean, the buybacks are still taking place. You have the financials that are going to benefit from a rise in rates as well, and the environment that we're living in. They have pricing power, all that good stuff. I think JP Morgan also beats the market this year. And so those are the three that I think do it. There's going to be a lot more in this space that I think do. Obviously, you guys know how we feel about energy. I think there's a lot of stuff in healthcare that could certainly do that as well. But those are the three that I think could do it for sure.
Yeah, and kind of as people look at, you mentioned value. I think dividend stocks are going to have a great year next year. I think they're going to be looked upon more than they were this past year and even the past 2 years. But yeah, like for me, I'm not worried about speculative right now. I'm like, okay, what's the deal?
Yeah.
PayPal looks so good. PayPal looks so good to set up for a great 2022. Visa looks really good for a great year. There's definitely a lot of good stocks out there. We mentioned Disney earlier. Those three are probably my top highest convictions where they're not going anywhere. You can just, dollar cost average. And to your point about Amazon earlier, it's rather frustrating, but the reality is like, these are dollar cost average stocks. Just keep adding to them. That's my strategy is like, I'll keep adding to it. And if you stay down, that's just me getting a better rate on you because I know Disney's going to be here 20 years from now, 30 years from now. And that's the same for some of these other companies that are out there. There's opportunities for sure.
Yeah, absolutely. And we didn't really address this because we always kind of like talk about stocks that we want to buy, but what about stocks to avoid? I think it's a great question. Q Diddy asks, what stocks take a hit when the Fed stops pumping? And we've kind of touched on this a little bit, but it really comes down to anything that is super high in valuation, large market cap, but they still don't make any money. And for the most part, we've seen a lot of those already take major hits. But I still think that those are going to be ones that I would probably stay away from. Specific examples, I mean, you can make the obvious guesses on some of those. You look at Peloton, obviously it's going to continue to probably get beat up. But even ones that are just barely making money, I think Snap could probably take a little bit of a hit, maybe be very volatile, but maybe going towards the end of the year, Snap could probably start making a bounce back. So look for opportunities in something like a stock that has a little bit higher valuation, but is right there on the cusp of sort of making money, but you don't really know what's going to come the next quarter. That could be something, but really just growth stocks that aren't making any money are probably going to take the biggest hits in the year. And those are the type of things that I would probably avoid.
And I just want to say this, Penn, I know we don't talk about it because we've been such high conviction on it. Penn's going to crush it next year. Yeah. There, I said it. Penn's going to outperform the S&P next year. You heard it here, folks.
That stock has been so frustrating.
It has. I think it's been, if I'm not mistaken, I think it's been the worst performing stock in the S&P.
It has been.
So what are the chances it's the worst performing 2 years in a row?
Don't say something like that. What is wrong with you?
I mean, well, it's impossible.
What are the chances? Now you just screwed us all. Looking ahead though. Hey, actually, real quick, looking backwards. So it was the worst performing stock in the S&P 500. But Batman Zoom, there are 11 stocks that doubled in 2021 in the S&P 500. And we had 4 of them consistently in the watch list for our Chaos Crew folks this year. So crushed it. If you guys want to have access to that, make sure you go to ownthechaos.com. 4 out of the 11 stocks that doubled this year were consistently on that watch list. And so, I mean, I thought we crushed it. We regularly crush it. Of course, we don't get it right all the time, but that was awesome. Marathon Oil was on that list that we always, talked about. Ford, of course. NVIDIA, and then Nucor as well. So those are the 4 that we consistently had on there on our watch list. So if you guys, again, want access to that, make sure you go to ownthechaos.com. It also just helps support the channel. And Fatman Zoom, that's going to do it for today's show.
All right, guys. We'll see you tomorrow.
Thanks so much. We'll see you tomorrow at 3:30 p.m. Eastern time. I believe Freddie Valoy will be in the house. We'll have to double check, but I think he'll be there.
Bye from Mississippi.
See you guys.
Bye.